Welcome, ladies and gentlemen. PDAC 2024 Commodity TV for you on the floor. Second day, Monday here. And we are now with Jordan Trimble, the CEO of Skyharbour Resources. I should say Uranium, much better. Jordan, great to see you. How are you?
Yeah, great to see you as well. I'm doing excellent, and
I
look
believe
forward to catching up.
In that shiny market.
Yeah, well, it's been a pretty good, certainly been a much better, 6 to 8 months for uranium. Obviously, the price has moved significantly higher. A little bit of a pullback recently, but I think that'll be short-lived. And we're starting to see capital flow into the equities, which is good. Still, I think some catching up to do with some of the smaller and mid-cap names, but people are paying attention to the commodity, and I think we're in the early days of what will be a much longer sustained bull market.
Yeah, that's the same feeling I have, to be honest. I think also this little pullback from 107 to 95, that's very healthy, I think, because I don't like that hockey stick stuff. And if we look at supply demand, it will cause us for the next 5 to 10 years a headache, right?
Yeah, I mean, look, the supply-demand fundamentals for this commodity are as compelling as they are for any metal, any commodity out there. Major supply deficit that's formed to the tune of 40 to 50 million pounds annually. We don't have the secondary supplies that we once had that were able to come in and plug that and fix that gap. Those secondary supplies continue to dwindle. We're seeing the market bifurcate east versus west. A lot of, in particular, Western utilities have been heavily reliant on Russian and Kazakh nuclear fuel. And I think that we're going to see that continue to put a stress and strain on the market, which will lead to higher prices, especially in the West. We're going to see the term market continue to ramp up. Last year, it was over 160 million pounds contracted, the most in many, many years, but still below that replacement rate level of about 180 million pounds. I think we'll see that 180 million pounds eclipse this year. Usually that correlates well with a much higher uranium price, or a price moving much higher. We're seeing the world continue to decarbonize. The sentiment around nuclear energy continues to improve. We saw in December, the COP28 conference in Dubai, over 20 countries signed the pledge to triple nuclear capacity by 2050. The big question is, where are they going to get all that uranium?
I'm asking myself also. That's why we need new mines. We need exploration also. That's what you are about. So how was the year so far for you? What is going on?
Yeah, look, this is going to be our busiest year ever as a company. We've just commenced an 8,000-meter winter program at both our Russell and Moore Lake projects. So very exciting for us this year, as we're going to be co-advancing these two advanced stage exploration projects just south of the McArthur River Mine and north of the Key Lake Mill. The road that services the McArthur River Mine runs right up through our Russell Lake project. We have an exploration camp there. So our drill costs are very, very inexpensive, certainly relative to other exploration programs in the Athabasca Basin, sub $300 Canadian all in a meter. Most of the targets that we're initially focusing at Russell are right off the road. So we can drill them all year round, and very, very pleased with what we're seeing thus far. We've just started, but already very exciting. There's a new target that we've refined over the last few months called the Fork target, which is a group of conductors that, as the name implies, looks like a fork, and there's a lot of structural disruption, seeing all the right alteration, mineralization. A lot of these conductors, too, are the continuation of uraniferous fertile conductors from the adjacent Wheeler River project, Denison's Wheeler River project. So Denison's a very large strategic shareholder of Skyharbour. Dave, their president and CEO, is a director of Skyharbour. So it's exciting to be exploring these conductors, these trends that we know host mineralization adjacent on the Wheeler River project. So Fork target is what we're going to be drill testing initially, but we've also got two other targets at Russell, at Grayling East and the M Zone extension that we're going to in total drill 5,000 meters at this winter. And then we're planning to go drill 3,000 meters at Moore Lake. And this is great because we haven't drilled at the main high-grade Maverick Zone really since 2018. And there's been results as high as grades as high as 21% U3O8 over 1.5 meters. That was within 6% over 6 meters. But when those results were announced back in 2018, we didn't have uranium trading north of $90 a pound. So we're going to go back in, we're going to infill and expand that high-grade zone. We're working on a resource estimate. The drilling there will go part and parcel with that. And then we're planning shortly thereafter, this will be now in, call it late spring, early summer, to kick off an even larger summer and fall program that'll be a minimum of 8 to 9, probably closer to 10 to 12,000 meters of drilling right through the summer into the fall. Provide lots of drill results, lots of news flow. We're fully funded and permitted for all of this as well. So in total, between Russell and Moore Lake, we've budgeted for a minimum of about 15 to 16,000 meters, could be closer to 20,000 meters, given that the drill costs are relatively low. And again, right through the remainder of this year.
Wow, fantastic. So that raises the question when we will see a resource estimate.
Yeah,
update.
well, more like, so yeah, we're working on that. Again, we're going to be carrying out this infill and expansion drilling, which we'll include in that resource estimate. So we'll have that number out later this year, as well as all the drill results from Russell and more.
Okay, super. So what would be then, let's say, the bigger picture? What do you want to do with all those great results? Because finally we have to go to the next level, right?
Yeah, I mean, look, so, we're thinking along those lines right now, and obviously we're working on the discovery and exploration success of these programs and resource expansion objectives at Moore Lake. But yeah, look, ultimately we want to deliver a new big high-grade discovery at Russell or Moore during this cycle. I think we have a really good shot of doing that this year. And again, like I said, with uranium trading where it is, it's gonna make a big difference having it trade where it is currently versus 5 or 6 years ago when it was sub $30 a pound. And then we've got, we've talked about this, but we've got our prospect generator business, right? So we've got now in total almost 1.5 million acres of mineral tenure. We're the third largest property holder by acreage in northern Saskatchewan, the Athabasca Basin. And so we've got our two main assets, Russell and Moore, that we're advancing. But then we have 7 partner companies that are advancing 7 of the other 29 projects that we have in our portfolio. 3 of those are now joint ventures with Uranium, with ISIN, and more recently with Valor. Proud to have these 3 companies complete those earn-ins. And then we've got 4 other companies that are still actively earning in as option partners, paying us cash and shares on an annual basis, as well as funding the exploration. And of those 7 partner companies, 5 of them will be either drilling or carrying out exploration programs this year. So that'll provide even more news flow and the potential for additional discoveries and our investors and shareholders to participate in other successes throughout the Athabasca Basin.
Super. I would say that sounds like a great game plan.
It is, yeah, very much so. And yeah, it's going to be a big year for us. And like I said, we're out there. We really have built Skyharbour up to be a one-stop shop for high-grade uranium exploration and discovery and resource expansion in the Athabasca Basin across multiple projects, with partner companies funding a lot of that exploration.
Super. Last question, when do we see $150 per pound uranium?
Well, we'll see. I mean, look, the commodity, as we've seen in previous cycles, tends to overshoot what would be, let's say, deemed a fair market price or value. 150, look, I mean, the reality of it is at $90 to $100 currently, that's still only about half of where it's traded historically in inflation-adjusted terms. So it's not out of the question at all. And if you look at what's been driving this higher uranium price, the catalyst, the fundamentals, they're all still very much intact. And so, look, I think we'll see higher prices sooner than later. I think we'll see the trend continue. As you said, not everything goes straight up. You will have pullbacks, you'll have corrections. That's healthy. But I think the long-term trend is still very much in the right direction.
Definitely. Super. Then I would say keep drilling. That's really a lot. Do the 20,000 meters hopefully this year. That would be great. And make sure the world is not running out of uranium.
Yeah, absolutely. You bet.
Super. Jordan, thank you very much.
Thank you.
Perfect. Yeah, ladies and gentlemen, that was Jordan Trimble, the CEO of Skyharbour Resources. I always want to say Skyharbour Uranium. So used to that. And you heard it, the Prospector generating business is going extremely well. They are the 3rd largest landholder in Canada now. And the things look really great. Uranium looks great. You should check out this company. Thanks for watching us, and bye-bye from Toronto from PDAC 2024.